Welcome to the Ackermann Group podcast. Let's dive deep into the industry insights of the multifamily, real estate investing, and property management world as we establish Ackermann Group at the forefront of industry change.
Hi, and welcome to Ackermann Group, the podcast. Today we have Chris Conan, our Chief Investment Officer, to talk a little bit about why it makes sense to invest today.
Yeah, good morning.
Good morning. Welcome to the podcast.
Well, thanks for putting this together.
Yeah, absolutely. Do you want to give a quick intro about what you do at Ackermann?
Yeah, so I'm the Chief Investment Officer and oversee everything related to the investment business that we do. And it's primarily acquisition of existing assets, all apartments. And we're in the what I would call the institutional space. So we're buying 250 plus unit fully amenitized properties. About half of what we buy is value add. So it's taking a significant lift in the physical product, and then we're repositioning the property from a rent perspective. The other half is what we call a core plus strategy, where we're going in and fixing operations, cleaning up curb appeal, preventative maintenance, and then operating long term. So we hold properties for 7 to 10 years. And we use a fund model to invest through.
Yeah, thanks for being here.
Yeah.
Do you want to jump right in and kind of talk about some of the unique opportunities the current market climate presents?
Yeah. So today, the market, it's really the first buyer's market that I've seen in the 20 years I've been doing this. We have a constant strong demand for rental housing. We just don't have enough supply. There's been a surge of supply over really from COVID up until through this year. It's going to start dropping off in 2025. And that slowdown in new supply is going to, again, create the imbalance with the demand that's out there. I think we have about 3 to 4 million housing units that we are short across the country. Now that's varies from market to market, but we do focus on secondary markets in the Southeast and Midwest, and we're really focused on those markets that have a real supply demand imbalance. We're also seeing and hopeful here indications that we're going to see more favorable financing conditions as we go forward through the end of 24 and into 2025. So that's going to really help create a good buying opportunity. And we've always found that some of the best investments we've bought has been in a declining interest rate environment. A couple other pieces. Right now, it's unique that you can find some really high quality assets in the marketplace today that are at attractive valuations for multitudes of reasons. But I think the market today, it's a unique opportunity, and it's different than any cycle that I've seen in my 20 years doing this.
Wow. And I think, you touched on this a little bit, but why are alternative investment options such as real estate becoming more attractive in today's landscape?
Yeah, we're really seeing a lot more demand from institutions, whether it's a registered investment advisor or a different institution. And it's really helps create balance in portfolios. There's a lot of stability, specifically in real estate and in what we do in the multifamily space, particularly. They don't correlate with the public markets, and that creates a really good diversified investment asset class when you to balance these portfolios with stocks and bonds and other public markets. So I think higher risk adjusted returns also help those portfolios, and they're generally a hedge against inflation, and particularly in real estate.
Yeah. For someone that might be looking at, alternative markets, we tend to look into those that might be overlooked in Midwest and Southeast areas. Mm-hmm. What advantages are those offering compared to the traditional assets?
So really the advantages of real estate assets, as I mentioned, you've got some stability. They're stable, consistent cash flow, preferential income tax benefits with real estate, and the potential for appreciation. Real estate tends to be less volatile than public equities, and can really serve as a strong hedge on against inflation. Ackermann Group, in particular, really enhances these benefits, I think, by providing operational efficiencies, active management, and ensuring that the investments are aligned with the different evolving market dynamics that are out there.
Absolutely. The question, when's the right time to do it? What are some
Mm-hmm.
factors you should take into consideration?
Well, everybody should either do their due diligence and gain a full understanding of the investments, or get advice from someone who they trust, who has that experience. But ultimately, we believe you can make really good investments in any market cycle. You just have to always be in the market to find them. And for an example, the last several years has been a challenging buying market, but we have ramped up our acquisition team, and we're looking at more deals. We'll look at 200 plus deals this year with the goal of purchasing 3 to 4. So it's a numbers game. It takes a lot of work to find the good ones, and but in general, you got to have clear goals and understand the risks and tolerances, and particularly you have to understand the time horizon. We believe in holding these assets longer term than a lot of institutional investors, and we're 7 to 10 year hold periods, and frankly would prefer to hold longer if it were the right timing. The time really is on your side with a lot of investments. That's anything you do, whether it's public or private. But in general, and evaluating the current market conditions is also important. And again, if you don't have that knowledge, or you can rely on advice from someone who has that experience that you trust.
Yeah, absolutely. Playing into that, just because you might not have the knowledge, I think, especially here, we have a lot of resources for someone,
Mm-hmm.
Whether that's one-on-one or just even what's out there on the web. How has the investor sentiment shifted recently based on the different market conditions changing? And how is that, kind of fear of market uncertainty something that someone could overcome when deciding to invest today?
Yeah, I think making sure that a lot of it is you're investing in the team and the people who are running it, as much as you are the asset class, and you really need to dig into and do your due diligence on not just performance, but also the processes and procedures that the manager uses to create successful investments over the term. The due diligence is important, considering the asset classes and the intrinsic value. But ultimately, I think it's working with a trusted investment partner to make sure that you're successful in your investment goals.
Yeah, absolutely. And I think Ackermann Group does a really great job of
Yeah.
setting the standard and really having a great relationship with our investment portfolio.
Yeah, it really is. If you don't have an investment advisor, and you do a lot of this on your own, you got to make sure, just like you would have a trusted investment advisor, you have to have a trusted real estate manager to be able to be
Absolutely.
successful at this.
Do you have any additional closing thoughts?
Well, I think it takes a flexible mindset uh, to make sure that your goals are aligned with the investment goals of the manager that you're looking for. For Ackermann Group, our commitment to disciplined asset management, value creation, is key to delivering strong returns long term, and we've been fortunate enough to be able to do that. But I encourage investors to consider the long-term benefits of alternative investments, and specifically real estate, in helping achieve their investment goals. And if we can be of any assistance in that process, always feel free to reach out.
Absolutely. Well, thank you so much for being here today.
Yeah, thank you.
Yeah.